Hi everyone, welcome to today's video. We are going to have a look at AMD's earnings coming up next week on Tuesday, I think 29th of October. And you can see that they gave a guidance of 6.7 billion US dollar on the previous earnings and a gross margin non-GAAP of 53.5%. And usually AMD are quite, just right on point with those guidances. And we can see that I went kind of in the middle of the road there, so 6.845 billion US dollar. Interesting details are there to be seen. You can see that the data center is finally starting to look, real business for AMD, in my opinion, if they manage to get these numbers, which I'm fairly confident of, because you have to know that over the past 3 months, data center has been looking quite great for AMD. You could argue that the embedded hasn't not been, doing that great over the past year, but still you could say that according to Lisa Su, embedded would kind of recover a little bit by end of this year compared to the earlier this year. So I went very conservatively according to, if you follow what Lisa Su said, at 880, which is essentially the same as the first 2 quarters of this year. The gaming, this is a difficult one because I think PS5 Pro launched and they are doing, very good for PlayStation, but on the Xbox side, they are not doing that great. And also on the, uh, DIY market, so people that are buying gaming GPUs for private consumers are not also doing insanely great there. So maybe that's gonna be a really weak part of these earnings. Then we got the client segment, and this is, your laptop APUs, your laptop CPUs, which AMD is doing really great at right now. We also know that they are getting really nice tractions with their DIY market for the CPU side compared to Intel. Intel, which kind of just recently launched their newest chip, Intel Raptor Lake, and trust me that Intel Raptor Lake is yeah, it's not doing that great. Or sorry, actually, that's not Raptor Lake. That's Arrow Lake. Sorry. Yeah, so Arrow Lake is not doing that great at all. Although I would say, let's wait and see after give it a couple of weeks or months, because I think there's a lot of new kind of architectural designs in Arrow Lake, which could possibly give it, a kind of fine wine kind of moment. But yeah, currently AMD is, topping the charts essentially everywhere, especially 7800X 3D. And we know that the successor to this chip is going to be launched in just around, let's say, 3 or 4 weeks from now. So when it comes to the different segments, I think data center and client will be just fine. Data center will be really, really fine. And yeah, maybe a weak point on the gaming side. But let's wait and see. Cost of sales, I think it's going to go up around 10 to 12%. And that is based on, usually the revenue increase is more than the cost of sales, which is something that we obviously like. And you can see that the amortization kind of segment on this here, it's kind of the same kind of level, and usually you don't see any huge differences from quarter to quarter. So I just went with the same kind of number of the previous one, and this leaves you with a really interesting thing here. So remember that the previous quarter they had a gross margin on GAAP basis of 49%. They are guiding on 53 and a half, but that is remember a non-GAAP number, not GAAP. And in my opinion, we should see a 51 and a half, maybe 50, close to 52% of gross margin on a GAAP basis, and that is that is huge for AMD. I think it's essentially all-time high, or at least as far as I've been following this company, it's never been this kind of levels. The only time it's been close over the past 10 years, it was in Q4 of 2021, when we had huge kind of, insane client segment where people were at home during COVID and bought, laptops left, right, and center. So there's that, and going down a bit further down, looking at, the other costs, the R&D shouldn't increase by a whole lot, I wouldn't say. So yeah, the operating expenses is gonna, go up a little bit, but not by a whole lot, around 2 or 3%, let's say. Like even if it goes, 3% is not a huge increase compared to, the gross profit that goes from, yeah, let's say, I don't know, 2.8 to 3.5 or so. So it's a nice increase there for AMD. Then we're looking at some other lines there, not so interesting, interest expenses and so on, usually in the same ballpark, in the low tens of millions. And then looking at let's say net income gap, it should be around 750 to 800 million, I believe, somewhere there around. And yeah, that's gonna be more than 2x, and it's essentially close to 3x of previous earnings, which was already twice the number of Q1 of this year. And what does that mean for the earnings per share? Well, it means that we are going from 7 cents to 16 cents and now close to 50 cents of earnings per share. Remember, that is, just sequentially from Q1 to Q2 to Q3. Now, even if I'm way too optimistic here, let's say if they come in at 32, so just 2x of, the previous quarter, which I think they will quite substantially beat. But that would even then be really, really, like, imagine like doubling your earnings per share in a single quarter, right? Not compared to the previous year. I'm talking compared to the previous quarter. So yeah, they are going places, I think. And if you go to the non-GAAP numbers, it's gonna look even better. Remember that they had this, huge Xilinx acquisition, which leaves them with a lot of, um, kind of amortization and acquisition related intangibles, as we can see here. That kind of gathers up together and makes a huge difference between AMD's, you know, uh, non-GAAP gross margin and GAAP gross margin. In fact, I added another line here. You can see that if you take the non-GAAP gross margin and see the difference between that and the GAAP gross margin, it's kind of slowing down, and this is really important. And it's basically due to the fact that as the revenue increases, the fixed number of Xilinx and others amortization acquisition related costs that they have every single quarter is becoming less and less part of the share of the revenue compared to revenue. So if they have I don't know 500 million of acquisition related cost each quarter, and the revenue increases, obviously it's going to be less and less affecting the difference between GAAP and non-GAAP, which I think a lot of people are kind of looking at when it comes to AMD. They see this huge difference sometimes. So remember, if you go to Q1, for example, you can see the huge difference of 7 cents of GAAP net income or GAAP EPS, and then you look at the non-GAAP one that is at 0.62. So there's a huge difference, but remember that difference is becoming less and less and less. And yeah, so I think a company like AMD is gonna come in at around 0.5 and just around 0.8, 0.9. And this is a hugely fast growing company. I think as we go into 2024, they are the main competitor to Nvidia. Nvidia is sold out throughout the next year. So where are you gonna buy your AI GPUs? Where obviously you go to the second best player. And it's also a case of the looks like at the moment, if you look at the different indicators, it could be the TSMC allocation out there, how much manufacturing capability do they have, where does it go, how many percentage of that goes to Nvidia, AMD and all the others. And you can see that the Nvidia is really, really gobbling up as much as they can. But remember that if you're the big players on the utilizing this AI software, like Alphabet, like Meta, like even Apple or OpenAI and Tesla, you wouldn't the last thing you would want is to have one single player dominating the market, right? So I'm not arguing from a point of view that AMD will come and take 30 or 40% market share in a few quarters, but what I'm saying that would I be surprised if they take at least 10 to 15% of the market within 2 or 3 years in a growing market? No, I wouldn't be. So at 10% market share for AMD in a market, let's say, that is selling hundreds of billions of AI GPUs. In fact, let's have a look at how much it is. So if we go to the data center sales, you can see here that Nvidia currently, they are on their way to have, let's say in the green numbers here, that is the revenue for only the AI GPUs. And remember, this is only AI GPUs, not even the AI GPU plus the networking communication part of that. So only the AI GPU part, Nvidia is going to sell just under 100 billion or so US dollar, right? And next year maybe well over 100 billion. Maybe this number at 112 is way too conservative. So if AMD gets anywhere around 10 billion or maybe 12 or 13 billion of sales next year, it's gonna be huge for AMD. Like it's gonna surely like affect their numbers amazingly. And how much? Well, if you scroll to let's say Q4 of next year, how much would that be? So if you quickly look here, you can see that if those numbers are becoming true, I remember that I didn't necessarily increase the embedded or the gaming segment for AMD by a whole lot. Now compared to Q4 of 2024, we can see that in my forecasting for next year, the gaming would sure be more than 2x than Q3 or Q4. But if you go back, to just more than a year ago, they already were selling 1.3, 1.5 billion or so in gaming. And in fact, they had like 1.8 or something there, almost 2 billion US dollar in sales in gaming just. So I don't think, it's you couldn't say that gaming at 1.4 billion is huge. It's good, but it's not, insane. Embedded, same, at around 1 billion. So the big chunk of increase from the revenue that you see at around 11 billion or so for Q4 of next year is obviously coming from data center. And if you specifically look at their data center sales, that is getting really interesting. So I've tried to divide it into two segments. You can see their Instinct and their Epic. So Epic is the CPU based servers, and Instinct is the, in the normal terms, AI GPUs that everyone talks about. And as you can see, for 2020, let's say 2024, for the full year, we can see that Instinct is supposed to sell a little bit less than Epic, so less GPUs than CPUs. But as we go into next year, we can see that that's gonna most likely reverse, where their Instinct lineup, so the AI GPU, will outsell their Epic lineup, which also will have their all-time high. So yeah, it's a good position for AMD if everything turns out to be correct. I'm really optimistic, especially for next quarter and also the guidance of Q4. There's some kind of negatives out there. I know that there was something from Morgan Stanley yesterday talking about maybe AMD cutting down on the CoWoS allocation some part of next year due to lack of demand or not as much as demand as they would have wanted. But I'm not sure that is the correct way to look at it, because I know that Morgan Stanley previously and historically has always been, let's say shady. They do some stuff that usually don't turns out to be correct. So I'm not 100% sure there. Let's wait and see. But I'm really hyped for AMD. I think at these prices, if they manage to get a gap net income of just under 50 cents, that's just based on this quarter, around $2 of gap net income, which is a PE ratio of 75. But remember that I think it would be more realistic to look at non-GAAP for AMD due to the Xilinx acquisition. In that sense, we are looking at 0.8, 0.9, maybe even $1 of non-GAAP earnings per share, and that's a full year of next year of around $4 to $5 of let's say earnings per share, which is just exactly around 30 times PE ratio for an extremely fast growing company. So no, I like AMD at this kind of levels. They just need to continue on this path. So yeah, let's wait and see, and I will definitely do a follow up on this for an upcoming Tuesday. So please like and subscribe. Thank you for your time. Share your comments in the your thoughts in the comment section, and see you in the next one.